Okay, today's Monday, October 19th, 2020. Just to clarify, I hold no licenses and nothing I say or recommend should be considered investment advice. First of all, I want to talk about general gold and silver. There's two ways to view it. One is like a hedge or an insurance policy in an emergency. The other is an investment. It's kind of hard to decide how to spread it out. So basically, I would recommend everybody have some exposure to it and try to spread it out evenly. Basically, no matter how much or how little money you have, at least 1%. So even if you only have like $1,000 in savings, buying one silver American Eagle should be good enough because it's worth about $25 right now. And then later on, when you get more and you have extra actual, substantial investment funds, maybe you raise it up to 3 to 5%, but definitely not more than 10. So basically, simple is something like JM Bullion. I prefer coins simply because they're harder to counterfeit or fake. Unfortunately, even with the silver, there's stories going around about counterfeit stuff on that. When I buy from JM Bullion. They have a nice thing when they post the spot prices, and you just go like in stock silver. Example, the favorite is American Eagle. Right now, their minimum for free shipping is $199. So if you buy about 7 of them, you can get free shipping on it. One of the advantages about buying just straight silver coins or gold coins is that they also have a face value. Now it's $1, so compared to market price, the price of everything would have to fall dramatically, but at least no matter what happens, it would never go below $1. One of the other interesting things is that there's Canadian coins, the Maple Leaf, and they actually have a higher face value, $5. But if we get so much deflation that the people are using them for their face value instead of metal value, I'd be extremely surprised. Typically, also, the coins go up in value over time. If you look, you'll notice that the older coins are slightly higher than the newer ones, usually for the same condition, simply because they also have the coin collectability element. But for our purposes, for an insurance policy against inflation or hyperinflation, you only care about the metal content. Same thing with the gold, although obviously one of the reasons why to go with silver over gold is that even if something happens and they do a negative executive order like they did during the Depression, silver they leave, gold they take except for small quantities. However, the advantage of the gold over silver, for example, right now, a gold coin's about 2,000, where silver is about 25. So basically, you would have to have a whole bunch more of so like one gold coin would be equal to 80 silver right now. So basically, it allows you to move larger amounts of money in a much smaller space. And there is some argument that gold is much more accepted value of monetary exchange than silver is. Silver has an unusual thing that it has more of an industrial component to it. So you also get the thing affecting its price as to whether or not there's any industrial demand or as much for silver. The other thing that I like, stocks that are specifically in it, probably I would say the best and safest is Barrick Gold Corporation. Right now, they're actually doing, they're about to go net cash positive, meaning that basically in a few more quarters at the rate that they're building up cash, the cash on their balance sheet is going to exceed their debt. Usually in the past, that was unusual because unfortunately during every kind of gold or silver boom, the mining companies would all go nuts and they'd start borrowing more and more, and they keep buying up companies, and they'd keep doing it while the boom was going down on, and eventually things would back off, and then the whole company is in severe trouble, or worse, goes bust. Warren Buffett's bought into this. I think he only owns like 0.5%, only 500 million of the stock, but again, he's there. So the stock started declining. We assume he'd step in and buy more. And again, I guess the maturities aren't supposed to be till like 2023. So even if gold for some reason backs off, they'll still be doing all right. And again, if the price goes down, assuming all things are the same, that is on the stock, the price of gold stays up and so on, then it becomes a better buy. And again, in a few quarters, they're actually going to be net cash positive, having more cash on the balance sheet than total debt. The other one, if you want something a little riskier and higher growth, is Kirkland Gold. Again, the main difference between the two, they both seem to be well run, but Kirkland's, their production and earnings are growing at much faster rates than Barrick. But starting out, I would start with Barrick, and then maybe, after you have like a few hundred shares, then maybe put some into Kirkland. Also, while this is going on, you got to watch to make sure that the stock doesn't really get ahead of where the market is, because once the mania starts, many people doing anything with gold and silver, whether it's physical, metal, stock, they have what they call their core holdings, meaning they keep them, and they would only sell them like if there was an emergency, like they had to move, and this was the only money they had left in the world. And then another part of it, like maybe about 30% of the total holdings, they traded, meaning that they buy extra when they think the price is reasonable or low, and then if the price seems to be getting silly or too high, they sell it. If it turns out they're wrong, they've only sold 30% off of what they had, they still hold the other 70. One of the things that I think should help in the coming week or two is that they're going to do another stimulus plan. And it looks like, I'm going to guess, it's going to be somewhere I guess the reduced amount is $500 billion for getting everybody another $1,200 check and an additional $300 on unemployment. But I expect, whether it's before or after, at some point, they're also going to do an additional, probably somewhere around $2 trillion, bailout for the airlines, bailout for a number of other businesses, some sort of bailout for the states. So I'm expecting that once they start throwing in an extra few trillion in spending, that basically this is price is probably going to get over 2,000 again. Probably silver will hover around 25, and then going forward, throwing in an extra trillion, $1.5 trillion into the economy of spending, plus whatever else we do into next year because of the outbreak and the slow economy. And that's all I have for the midday today.